What up, guys? It's December 1st, and let's do this market alert. We're going to go over this crazy market that has us like seagulls in a hurricane, just getting knocked from left to right, up and down, and just giving us a beating, the beating of our lives, all right? Or at least the beating, the worst beating of this year so far. So I want to go over why the action is what it is, what I'm doing in the market, what I think will happen in the market, and the reasons that the market is acting this way. But before we do, of course, please hit that like button. I definitely appreciate it. Hit subscribe. I hope I'm giving you some value in these videos and we have some fun in the meantime. Also, I'm going to talk a lot about financial things, valuation, and what I'm doing. Please understand, I'm not a financial advisor, okay? So I'm just going over my experience, what my opinions are, what I'm doing. Trade and invest at your own risk, all right? Do your own research, make your own decisions, or consult your financial professional, right? So let's get started here. And of course, I put the bear up. Just like I said, we're getting a total beating from this market. And I want to go over those reasons, but let's start with the 5-day charts. So here we go, guys. So we got the Dow Jones, S&P, NASDAQ, and Russell 2000. To note, before I've gone over these, of course, you guys already know Dow, S&P, NASDAQ. I'm bringing up the Russell 2000 because I think that's very important. These are the small cap value names. These are stocks or companies that have a market cap of maybe $5 to $8 billion or less. So these are essentially your smaller type of businesses that trade in the New York Stock Exchange, and they've been taking a beating. There's just no other way to put it. They've gone nowhere this year. Their valuations are very attractive, in my opinion, but still, that hasn't prevented them from being hit badly, okay? Especially in the sell-off here. But we start with the Dow Jones, down 1.34%, NASDAQ down 1.83%, and S&P down 1.18%. The Russell taking the biggest beating of them all, 2.34% to the downside. Okay, so today we got news that the Orbicron, and I say Orbicron just to be funny, okay, the Orbicron variant, and the first case here in the U.S. The news hits about 11 a.m. this morning. So about right here, the news hits of that variant. Okay, and I was waiting specifically for me. I was waiting for that shoe to drop, for the first case to come to the U.S. because it's going to be no surprise that there's already cases here when you have cases in Germany and England, Netherlands, Belgium, and all kinds of places. Macau, you have cases all over the place, and it's more transmissible. But of course, the news, of course, and I'm no scientist, is saying more transmissible, but way more mild than the Rona or the Delta variant of the Rona. All right. So take that news for what it is, but it did affect the markets today, and that's why we did some buying today of several stocks. We'll go over those in a little bit. All right. But let's go over essentially the whole market and what forces are driving the market altogether. So, of course, these are the market forces based on my opinion and based on what I know. We're starting with the Orbicron variant, of course. I know it's not called Orbicron, but just trying to be funny for purpose of this video, all right? And a dovish Federal Reserve turning more hawkish at the end of the day. Remember, dovish is easy monetary policy. Hawkish is hard monetary policy, meaning higher interest rates, less money supply. So the Federal Reserve has already told us recently that they're planning to accelerate the bond purchases and actually accelerate the taper of those bond purchases. Essentially, that would push bond prices higher, right? And meaning that rate increases are closer than we would think. I think that's still a little bit of speculation because essentially saying that the Federal Reserve is turning more hawkish is a little bit misleading because the Federal Reserve has been a dove, essentially, very peaceful, easy, ultra easy dove. And think about the dove as getting a little tattoo, right? Just getting a little tattoo and turning a little bit more hard, but it's still a dove. It's still nice. So just a little bit more hard. So they're not raising interest rates yet. They're just saying, hey, we're still buying bonds. We're still pumping money into the economy. We're just going to accelerate the taper, meaning we're not going to do it as much, and we're going to do it a little bit sooner than what you think. So I don't think that's a bad thing because they're still supporting the economy through bond purchases, just not as much as Wall Street was expecting. So I'm not too crazy about the Fed, for the long term. In the short term, it is affecting, but for the long term, no. Okay. Then there's also the talk of inflation is not transitory. So people have been, left and right and all kinds of different places about inflation. I've always said I believe that inflation is transitory, but transitory meaning It comes, goes away, but we don't know when. We don't know how long transitory is. Transitory could be 6 months, a year, 2 years, 2.5 years. But I do think it's transitory because we're giving companies, corporations, time to deal with supply chain issues, which are the biggest driver of inflation by far. Okay, when it comes to finding solutions for these problems, talk to Ford. Listen to the conference call of Ford where they're telling you, hey, we're making deals with global foundries for the semiconductor chips that we need. Okay, that's going to reduce the price of used vehicles when they are able to produce new vehicles again and reduce inflation in that sector of the economy. And companies like, let's say, a Walmart, which is reducing prices and actually not increasing them and not passing inflation to the consumer, that helps inflation. So corporate America will find a way to overcome inflation in order to do better in business. So I think that this is still transitory, but it's such a complex thing and it can be attacked from so many different angles. It eventually will be attacked and controlled one way or the other, right? And then there's of course here energy prices and interest rates. This is a neutral thing, and that's why I have the two sideways arrows. I think that energy prices are neutral and interest rates are neutral, and let me explain why here. So let's start with oil. We have here a chart of the West Texas Intermediate crude price for January, $66 a barrel, when it was hovering in the mid-80s almost just 30 days ago, maybe less than 30 days ago, and it's just taking a massive drop to the downside. This is positive for the middle class, people like you and I. This is not a negative thing for us. However, a sharp move in oil is not an overall good thing for the economy. So I would like these prices to stabilize more and not have such a reactive thing, because the prices are dropping because the economy or Wall Street is saying, hey, we are foreseeing that people are using less oil because they're going to stay indoors. And I don't think that's the case. So take advantage of $66 a barrel oil price while it lasts, because I think it's going straight back up, all right? Now, when it comes to bond rates, I bought here the U.S. 10-year Treasury bond yield. That we've also seen a decrease in the bond yield, and I would have expected this to actually go up, because when the Federal Reserve buys less bonds, the price of bonds should go higher. So bonds work in reverse as the stock market. As more bonds are bought, are purchased, the price goes down. As they are sold, the price goes higher. So there's a lot of dynamics here at play, a lot of world dynamics at play, specifically with Japan and Europe. And Japan and Europe are major buyers of U.S. debt through bonds. And what I mean by that is that their own bonds, the European bond and the Japanese bonds, they yield almost negative rates, if not negative rates. So for them, a 10-year Treasury bond yield at 1.44% is actually quite attractive. So it's very easy for them to keep the bond prices lower when they see them skyrocket when the stock market sells off and people rush to safety. So at the end of the day, I think that the U.S. Treasury bond is showing a positive sign at the moment, staying below 1.5. I think that's very positive for the market. So we'll see what happens there, of course. You never know. So enough about that, guys. I feel like I lose a lot of people when I talk about oil and bonds and all this kind of stuff. Let's go into what I'm doing in this market and my philosophy behind this, all right? So very simply put here, these are the reasons that I am buying this market. The first reason is company fundamentals, all right? So when you buy a stock and you hold a company, whenever the Orbicron hits or whenever the Fed is doing A, B, or C, does it affect the fundamentals of the businesses that you own or the businesses that you want to own? And my answer would be no. We did some purchases today, and I don't see interest rates. I don't see the Orbicron variant being very effective to these companies at all, especially to the downside. Like a company like Teladoc, I see that being an upside. So the Orbicron variant being an upside for Teladoc, still getting hit. So no reason for that to go down, especially if the fear is the Omicron variant. And like I said, it's a mixture of so many things. And at the end of the day, valuation is what matters. That is what matters. Valuations and a company's earnings, when they report earnings, is the valuation too low or too high? That's what matters to me. And that's one of my major drivers when buying stocks. So when I see a company like Teladoc, which we bought today, being valued the way it is as follows. And here's the chart of Teladoc today. I mean, getting hit $93 a share. I mean, it was hovering around $100 today, and it lost 7% on the day. I mean, incredible. If you guys see here a 1-year chart or year-to-date chart of Teladoc, this was trading at $292 a share. In January, February, it was trading that much. February 15, that's where it says. Guys, look at that. $93 a share. $15 billion valuation for a company that has a total addressable market of $200 billion. I mean, that is insane. I don't see why I wouldn't buy this stock when it gets hit. And essentially, you have to understand, when I buy this stock, I'm not going to hit the bottom. I'm not going to do it. I'm never going to hit the bottom. Actually, my cost basis is about 106 at the moment. But who cares, right? I'm taking the window of opportunity to add to my position to a stock that's going to be worth maybe $100 billion in the next 2 or 3 years. So not worried about Teladoc at this valuation. I think it's just kind of gimme at this point. So yeah, Teladoc, I'll keep buying. I have no problem. I'm just doing it slowly and when it makes sense with the macro news. Like when the first case was reported today in the US, I thought, here we go, markets are going down, late afternoon, it's time to do some buying. And we sure did, all right? Here's another stock we're buying today, guys. PayPal. Buying PayPal under 180. What's going on? $210 billion of market cap for a company that could be worth $1 trillion in the next 5 years. I mean, insane. This could be a opportunity of a decade to buy PayPal at this valuation with the amount of money they make, the exposure to Bitcoin. The CEO was just on Mad Money. I think it was yesterday, and he spoke great about their Pay Now or Buy Now Pay Later program being up 400% over the Thanksgiving weekend. 400% over a weekend. I mean, that is incredible. So PayPal Holdings, we'll keep adding to this if the market gives us the opportunity to do it. It's almost getting to the point at which it's like shooting fish in a barrel. So if you're not getting into these stocks, guys, I don't know what you're doing. I don't know what you're waiting for. I mean, if you're waiting for total devastation, I mean, if it never comes, you just missed the opportunity of a lifetime. So mind the valuation, guys. And now here's Honest Company at $8.10. I need a little bit today, just very slightly, under $1 billion valuation. What are we doing? What are we doing here? If not adding, I push my cost basis under $10 a share, about 650 shares, something like that, and keep adding more if it keeps going lower. I mean, we'll just take advantage. My position is pretty much set there. Anything under $7 a share is just a gift. So I'm taking the gift all day long and being patient because I'm not looking to double, triple my money in 2 weeks, 2-3 weeks. I'm doing it over 2-3 years. So totally fine here adding shares of Honest. And one of my biggest buys of the day, DraftKings. And DraftKings is one that I've been adding in the 30s for a while. All right. And I've added pretty good after it fell over under 40. I've been adding very little and now higher as it's dropped into 31 and a $12.5 billion valuation for a company that's clearing, that's going to be clearing in 2022, $2 to $2.5 billion in revenue. So I don't mind this company at all. Remember, the problem with DraftKings, if you want to refer back to my last video, is the competition. They're going to have some cash burn to try to take out the competitors and establish themselves as the market leader. And we do believe DraftKings is going to be the market leader. They will be the winner, and we will see a market cap of maybe 50, 60, 70 billion dollars in the next 2 to 3 years. So why not add DraftKings at this point? This is a completely debt-free company that has great backing, great products. They are innovative, they're focused, and I love their management. So no reason not to add here. These guys, management was adding hundreds of thousands of shares in the 35, 36 range. Now you get it for cheaper than management bought it if you're buying DraftKings stock. So very much happy with our position there. And keep giving me a lower price. I'll keep scooping, guys. Keep scooping. And then the last one we were adding today was Corsair at $21 a share. Where we're adding Corsair. This stock just keeps getting hit. I mean, it's just getting demolished. But we're pretty much buying a company here at revenue. The guidance, the yearly guidance for this company, I believe, was like 1.89 to 1.95, somewhere close to $2 billion of revenue in a year. We're buying this at revenue here. This is a company that's seen difficulty because of semiconductor issues, the GPU shortages, which allow PC builders to build their PCs to buy DDR5 RAM and all kinds of things like that. CPU coolers, monitors, all kinds of things that they're going to be buying with high margins that are going to help this company make money. And I cannot wait for Q3, Q4 2022 for this company to prove what it can be and what a leader it can be on this field, on this gaming, streaming field that is just huge, has a huge total addressable market. So I'm looking for Corsair to be $10 to $15 billion in market cap. So why not add here? We added significantly to this one today. If it keeps going down, it's a gift, all right? Gift and a half. So that's it for the purchases today, guys. I still have eyes on other stocks here, and I'm looking at them. Wynn Resorts, I think that is a steal at the moment. Wynn Resorts has a value of $13 billion. If you were to contact Wynn Resorts and say, hey, I want to build your properties, just a clone of all your properties, Boston, Las Vegas, Macau, I want to clone them. How much would it cost? It would cost $13 billion. I think it's trading at about a $9 billion valuation at the moment. I mean, you're getting Macau for free when you buy Wynn Resorts at $76 a share, and that's where it's at right now. We have also, let's see here, Callaway Golf, man, what a steal. We had the Bank of America upgrade to 45 price target from Bank of America, or B of A Securities is called. I think that 25, it's definitely buyable. I'm not buying that one yet because I'm still quite positive in that position. But if it goes down to maybe under 23, I'm going to have to buy Callaway. It's just a phenomenal company. We have Rocket doing the same thing, but it's withstood the onslaught pretty well of this market. And it's actually, I think, outperformed other stocks, other, more high multiple names. Let me see here what else we got. Palantir under 20. Palantir under 20, guys. That right there. If you don't have a position in Palantir, what are you waiting for? Under 20, and if it goes lower, buy more. What are we doing? And then let's see here, Tattooed Chef 1551. I would wait for that one. I'd probably like to get that one in the under 14 range. I think it can happen. I think that one's a very, very long-term investment, Tattooed Chef. But that's it for now. Also, actually, no, not that's it. Planet 13, $3.50. I think that's one that you could add. Also, start a position there and maybe win under $3 a share to really load the boat on Planet 13. All right, guys, so that's pretty much all I want to go over today. Let me know if you guys have any questions. Stock Gladiator Discord, I'll drop a link. Also, hit me up on my Instagram for all my moves. Peace out, guys. Sorry I went so long.